Okay, SpaceX is now a public company, and it didn't take long for investors to start asking the same question: should I buy the stock? On this week's Matt on the Money, we are looking at why this IPO is getting so much attention even 4 weeks in, and how to think about a flashy stock without letting FOMO, fear of missing out, drive your financial decisions. And joining us live is Dan Bennett with Lakewater Advisory. Dan, great to have you with us.
Good to be back.
What is the current stock status on SpaceX? Has it cooled just a little bit?
Yeah, so early on there was a little bit of hype, especially pre-IPO, and then once the stock did become public, there was a lot of hype early on. The stock was pumped up quite a bit, and then it's come back down to life a little bit. So.
But still, is it still above the opening?
No, it's just below now.
Just below, okay.
Yeah.
So you said that when SpaceX went public like 4 weeks ago, your phone's like blowing up. What were clients wanting to ask you?
Yeah, so, really there was a convergence of a few different things. Number one, a lot of people like talking about Elon Musk and what he's doing and what his companies are doing, whether you like them or not. Number two was the valuation of the company was a little crazy. Pre-IPO had it at about $2 trillion, roughly about that now. And number three was the fast entry of getting the stock that became public now into the NASDAQ and into the index.
And that's kind of the thing that we'll address in the 9 o'clock hour, kind of what this means for general 401k holders. I want to put up, I think we may have the graphic. If we don't, we'll just talk about it. But it kind of shows SpaceX alongside some of the biggest public companies in the country. What should viewers kind of take away from that comparison? You showed it to me, kind of doing that side by side.
Once it became public, immediately became the 6th largest company in the world.
Yeah.
At a $2 trillion valuation. And NVIDIA, I think, was number one at about $5 trillion.
Sure.
Pretty incredible, especially when you look at its revenues. And I think 2025 was about $18 billion in revenues. Expected revenue for this year is around $30 billion. And I mean, these are big numbers. So a lot of folks think, okay, $30 billion in revenue, $2 trillion valuation. What does this actually mean?
Yeah.
When you look at a company like Amazon, it's about, let's say, $2.5 trillion valuation. Their annual revenues are about $750 billion. So $30 billion, $750 billion, $2 trillion, $2.5 trillion. So it has a lot of investors asking the question of, okay, if we're buying the stock now at this valuation, is this really worth it?
That's a great question to be asking. How do you kind of separate, Dan, liking a company or believing in its future, maybe believing in its mission, from deciding whether the stock belongs in your portfolio?
You can like a company and love their products and think that the stock is overpriced. Again, when you're buying a stock, you're buying its future earnings. Okay, so there's fundamentals that are involved in this. A great example that I use quite a bit is Disney. I mean, everyone loves Disney. You go there, the experience is fantastic, movies are great, but the stock over the last 10 years annualized is about 1%.
Has struggled.
So yeah.
For somebody tempted to buy in because everybody's talking about this, especially I feel like just up until now, and they still are, people are talking about this all the time, SpaceX. What questions should they ask before they make that move?
Number one, does this belong in your portfolio? Everyone's situation is a little bit different. I mean, it can belong in a portfolio. Sure. It shouldn't be the portfolio. So the best advice that I can give with any individual company should not make up more than 5 to 6% of your total portfolio. If you want to take a little bit of risk with it and see how it does, I think that's totally fine. You've got to be able to stomach, any losses that may come from it.
All that volatility.
Yeah, all the volatility.
And one of the takeaways we have here is to keep those single stocks in perspective. That is just to say, when the more of a single stock you own, the less diverse your portfolio is going to be, which means the more vulnerable you might be to the whims of the market.
And some people may be comfortable with that, and a lot of people may not.
Okay, so that's really good context, because it's not just about chasing like a hot IPO, right? This is about making sure that you are secure and stable and not overly exposed to that volatility. So Dan's going to be back with us next hour. Thank you, Dan.
All right, thank you.
We're going to talk about like why all of this with SpaceX as well, and how this could affect 401k holders at large, because this isn't just the people who are buying the individual stocks. So we'll be back with more after a quick break.